All right, everyone. So let's kick things off. Our first guest today is Anthony Pompliano. Pomp has become a great friend of mine in the last few years, working together in the cryptocurrency industry. He's also an investor and board member at BlockFi. Pomp is a co-founder and investor at Morgan Creek Digital, and his podcast, the Pomp Podcast, is a top 10 finance podcast in the finance and technology categories. And he also writes a daily newsletter about markets and investing. Pomp recently talked to Dave Portnoy from Barstool Sports. He recently converted Jim Cramer from CNBC into becoming a Bitcoin investor. And he's, potentially, when we look back on all this 10 years from now, going to be viewed as one of the most important people in helping to educate folks about Bitcoin and the cryptocurrency sector and why all of these things are so important. So Pomp's going to be talking about cryptocurrency. What is it? Why is it valuable? How does it work? Why should you care? Thanks again for joining us. Let's kick this thing off. If Pomp's here, we can start a few minutes early. I know he was scheduled for 9:15. If not, maybe we can bring Neil and Luke back on and we can chat a bit before Pomp's ready to go. Thanks again, everybody, and we hope you enjoy the show.
Yeah, and Anthony's here, I believe, right?
I am. Can you guys hear me,
right.
see me?
We see you.
Awesome. I appreciate everyone tuning in to this. I'm going to do my best to kind of go over just what is a cryptocurrency, what is Bitcoin, and why is this stuff important and valuable. It's a little weird that I can't see everyone or see what you guys are thinking. So I think there's a chat where you can ask some questions if you want, and then maybe somebody can read them out to me at the end. But first, I think starting with what is cryptocurrency or what is Bitcoin, we've got to look at what is the difference between a currency and money. And obviously, money is something that falls along with sound money principles. It's got some intrinsic value to it and is generally not controlled by a government or an organization. Currency is what we use today, which is something like the US dollar, a fiat currency. It is controlled by a government and kind of manipulated and created or destroyed based on the whims of the individuals who run those organizations. And so when we look at a cryptocurrency, really what we're looking at is a superior form of money, Bitcoin specifically. And the idea here is if you take the US dollar or fiat currency and you put it next to something like Bitcoin, they are polar opposites from each other. And I'll kind of walk through why that is. A fiat currency is inflationary in nature, meaning that we're constantly creating more of it and it kind of gets devalued over time, right? If you look since 1913, the US dollar has lost about 95% of its purchasing power. So $1 still equals $1 in terms of an accounting standpoint or as a unit of account. But what that $1 can buy you continues to be eroded away, right? You need more and more dollars to buy the same things. And so if you think of the ideas of, buy a home, the prices always go up. Well, it's not so much that the value of the home is going up. It's more that the dollar is being devalued. If you look at the stock market, there's a 45-degree angle straight up into the right, kind of at that nice 45-degree angle. And that's because the dollar is kind of systematically being devalued. And again, that's part of the system, right? That's a feature, not a bug of the system. We constantly are devaluing the currency to financially incentivize people to spend, to consume, or to invest. And so we don't want people to kind of hold on to that currency, or at least that's the belief in the fiat world. Also, with that, the dollar used to be physical, right? You literally paper money or paper currency, and then it became a kind of this electronic version. So if you think about when you go to your bank and you want to send money somewhere, really what you're doing is you're sending ones and zeros in centralized databases. And at the end of days, those centralized databases are basically netting each other out, right? Or balancing each other out. And so things like if you want to wire the money, you've got to do it by a certain time in order to make sure that kind of fits within the windows of these centralized ledgers all talking to each other. And then in terms of kind of the portability of dollars, you can take physical cash anywhere you want to go, but Still, if you want to carry around a lot of money, you got to put it in briefcases, you got to put it in bags, etc. And if you want to use the electronic version of the money, you are subject to all sorts of kind of nuances and frankly, technology obstacles with the legacy banking system. And what I mean by that is if you want to send money today or dollars from the United States to somewhere, let's say in Southeast Asia, and you want to do it through the traditional banking system, that may have 2 or 3 day settlement times. And in some cases, you actually have to send it from one bank to an intermediary bank and then to the final destination. And so it's kind of the best system that we've had. Is this inflationary currency that is controlled by a government. The government was kind of the best that we had in terms of making decisions and governing an economy. But now we've got this new digital decentralized currency called Bitcoin. And I think that what is ultimately going to happen here is just like in almost every other industry, the digital version ends up being more powerful, more valuable than the analog version. So if you think of every business, the internet pretty much disrupted those industries, right? There's not very many examples where you can think of, hey, there was an analog business, they then got digitized, or the industry got digitized, and the analog version is still bigger and more powerful than the digital version, right? And this is for a whole host of reasons, but basically just technology, innovation, and adoption. And so when we look at Bitcoin, I said earlier that it's basically a 180-degree difference than the US dollar, right? So it's a deflationary structure. It has a disinflationary monetary schedule or monetary supply. It is fully decentralized, meaning that no government or organization or individual controls it. And then it is digital, meaning that it has some technological superiority in terms of how you can use it, how secure it is, things like that. And so when I think of kind of what is so attractive about these digital currencies and Bitcoin specifically is basically what we've done is we have taken everything that we learned from the human-led currency system, and we have created an improved version, right? And so if you just kind of go through the various properties of Bitcoin. So start out just with the digital, right? I specifically use the terminology electronic for the fiat currencies, and I use digital for kind of these decentralized currencies like Bitcoin. And the reason why I do that is really when you look at, if I want to send the ones and zeros on one centralized database or ledger to another, that is something that looks kind of like a Web 1.0 type implementation, right? I have a centralized ledger. I want to send it. And so therefore there's some time restrictions. It's not a full free market system that allows me to just send those ones and zeros. And then also those ones and zeros can be created or destroyed at the will of not only one, the banking institutions, but also two, the government, the Federal Reserve, et cetera. So I use electronic to describe that type of mechanism. When I talk about digital currency, what I'm specifically talking about is cryptographically secure currency, right? So Bitcoin that I control, I have full sovereignty over, and I'm able to transact in a peer-to-peer manner, meaning that I can actually go to a merchant, I can send Bitcoin to another individual, and I don't need that intermediary. I don't need that third party. And so we move from an electronic version that is reliant on third parties and centralized ledgers to now this digital decentralized version. And so you can imagine there's a bunch of efficiency gains, there's a bunch of cost savings, there's a bunch of sovereignty kind of advancements, and ultimately it's just a superior system. So that's kind of from a payment network standpoint. When you then look at the actual currency itself being decentralized, so kind of the ownership, right? We're literally watching the Federal Reserve run basically a $3 or $4 trillion marketing campaign for Bitcoin. What do I mean by that? In January and February of this year, we were basically experiencing historic lows in unemployment. We had this raging bull market in the public equities. It was literally the longest bull market in history. Coronavirus hits, there's a government mandated shutdown. Basically, the velocity of money in economies around the world are stopped. We then see central banks around the world kind of reach back into the 2008, 2009 playbook, and they say, hey, if velocity of money is going to slow, there's a liquidity crisis, asset prices are selling off, dollar strengthening, we need to flood the market with more dollars. And so what we saw the Federal Reserve do is literally they printed $3+ trillion. There was a massive expansion, about 75% of the Fed's balance sheet. And what we then kind of watched is a systematic devaluation of the dollar. Asset prices stopped their free fall and then immediately kind of reversed course and absolutely exploded in value. And so we've kind of had this asset inflation occur since the end of March. Now, as all of that's happening, people are debating, should it have happened? Should it have not? I'm not here to kind of engage in that debate. What I'm here to explain is myself and nobody watching this had any say in that happening. So literally what occurred is there was a group of people who went into a room. They decided this is what we're going to do. And when they did this, they knowingly said, we are going to inflate asset prices and we are going to knowingly devalue the dollar. And so what they basically are doing is they're playing kingmaker. Those who own the assets, the rich, continue to get richer in that system. And those who only have cash that live paycheck to paycheck, they continue to get poorer and poorer because their wealth is being devalued away. And so literally the Federal Reserve, in their actions to try to stop asset prices from selling off, have decided that they are going to continue to further the discrepancy of wealth inequality in the United States. Now, again, that is a feature of the system. That is not a bug, right? The system is built to financially punish those who save cash and to reward those who invest or consume. And that's the whole idea behind inflation. And so if that system doesn't make sense, which to me, I think that everyone, right, given kind of the ethos of the internet, everyone should have a say, the democratization of participation, something like Bitcoin, which is fully decentralized. There's no one organization, one government, one central bank, or one individual who has control of this. And so ultimately what we get there is we get kind of a consensus-driven governance. And really all that means is that in order for anything to happen from a monetary policy standpoint, 51% or more of the people participating in Bitcoin have to agree for that change to occur. And so rather than a small group of, generally older academic types going into a room at a central bank and deciding what they're going to do and basically play kingmaker for a currency and an economy, instead we get a currency that is for the people, right? It's the people's money, if you will. And really it's because they get to, as a group, make the decisions. And that's kind of the beauty of the decentralization of Bitcoin. But that monetary policy that I described has one key component to it that I think is really important and really drives the value of something like Bitcoin, which is that it's a programmatic monetary policy. And so anyone who's familiar with the traditional financial system will understand that one of the kind of most speculative aspects is constantly speculating on what is the Federal Reserve going to do? Are they going to continue to manipulate interest rates, right? Earlier this year, we saw the Federal Reserve do 2 emergency rate cuts and bring us to a zero rate environment. Again, I didn't get a vote in that. Nobody here watching got a vote in that. And so that's just something that occurred. Well, while that was occurring, there was trillions of dollars being speculated or bet and kind of wagered on what was going to happen. Are they going to actually move interest rates or are they not? And then every periodic Federal Reserve meeting since then, again, there's speculation. Are they going to go to zero rates? Are they going to keep them at zero? Are they going to raise rates? What's the guidance that they're giving us for future, right? There's a lot of unknowns in that system. And those unknowns are only going to be determined, right, and become facts based on humans making decisions. And those humans are trying to take in data, synthesize that data, that economic data, and then try their best to make decisions. As we know, one, the unknowns make it really hard to make decisions for the future. That's why there's a market and people are literally wagering this money on those interest rate decisions. But also, two, humans are really bad decision makers, right? We're very emotional. We're biased. We have all sorts of flaws in the way that we make decisions. And so when you look at that monetary policy, that's just on the interest rate side. Then you can look at the quantitative easing. And so again, if you go back to 2008, 2009, when hundreds of billions of dollars was created, we thought that was a big deal. Now we're at trillions. There's likely to be another stimulus package coming down the pipe, and we'll probably end up somewhere over $5 trillion kind of in stimulus packages in 2020. And so who gets to decide that? Again, this is being determined by politicians and the central banks, and they're devaluing a currency. And the people who suffer are the people who don't own assets. 45% of Americans own no stocks, right? Almost 50% of Americans can't come up with $400 for an emergency payment. Today, if you look at the recovery, basically, if you have wealth or assets in the United States, the economic recession's over for you. We're basically back to pre-COVID levels of employment for high income earners, while still the low income wage workers are still almost 20% down in terms of employment. And so there's this idea of there's two Americas, but those two Americas are really being driven, again, all by Fed policy and by the structure of the economy and monetary policy. And so Bitcoin specifically has something called a programmatic monetary policy. And what I mean by that is simply that back in 2008, 2009, there was a monetary policy that was created. That monetary policy was put into software code. That software code is completely transparent and audited by anyone in the world. You can go and you can actually read it yourself. You can see exactly what the monetary policy is. And that monetary policy is set in stone. That monetary policy cannot change unless 51% or more of people agree to that change. And so the beauty of this is that there is no speculation in Bitcoin on future interest rate decisions, quantitative easing, quantitative hardening, any of that stuff. We know exactly what's going to happen. And so now when you have a set monetary policy, you are able to make decisions for the future based on what is going to happen because you can actually audit the software code. But not only are you aware of what is going to happen, but you do not have to rely on humans doing that. All you have to rely on is the software code actually executing. And so the monetary policy that Bitcoin has currently created is there's 21 million Bitcoin that will ever be created. It's an artificially capped supply. So you can think of anything like land or anything else that's scarce. This has something called provable scarcity, right? So if you think of gold, for example, most people don't actually know how much gold exists in the world. We've got an idea, we've got a pretty educated guess, but nobody can say this is the exact amount of ounces of gold in the world, right? We also don't know what the incoming supply of gold is on a daily basis. We also don't know in the US dollars, right? If I ask somebody how many dollars were printed today, nobody can tell me. And the reason is because all of this is based on a story, right? There's a narrative-based value, which is we're told that gold is scarce. We're told that dollars are being created or destroyed at a certain pace, but nobody can prove it. Nobody can audit it, right? There was always the audit the Fed type mantra. With Bitcoin, we not only can audit this stuff, but we can prove to the exact Bitcoin everything that is happening. It's a fully transparent system. So those 21 million Bitcoin were created as kind of the artificially capped supply. And the way that the monetary supply schedule works is in the beginning, every 10 minutes, 50 Bitcoin were created and then distributed to people that were running the Bitcoin network, basically on a pro rata basis. So if you ran 10% of the network, you got 10% of those 50 Bitcoin every 10 minutes. And so that went on for 4 years. And then after 4 years, there was a 50% drop in the incoming daily supply. And so Bitcoin basically went from 50 Bitcoin per 10 minutes down to 25. That went on for 4 years, then from 25 to 12 and a half. And then just in this past May, we went from 12 and a half to 6.25. The way to think about this kind of halving, right, is what it's called, is the Bitcoin halving. This every 10-minute type reward or kind of distribution of Bitcoin being halved every 4 years is basically quantitative hardening. It is the exact opposite of what we see in the fiat system. So while the existing system continues to create more dollars and distribute more dollars and devalue the dollar, what we're seeing with Bitcoin is the exact opposite. We're seeing quantitative hardening, which means that we're actually creating less and less of it every 4 years. And so that quantitative hardening mechanism has the opposite effect that quantitative easing has, which is if you know that there's a thing that people want and that thing is finitely scarce, meaning that there's only 21 million of them, and every 4 years it becomes harder and harder to get it, of course, the US dollar value over long periods of time continues to increase. It's the 180-degree difference to the dollar, which, as you know, that there's an infinite amount of dollars and every year there's more and more money being created, then of course, over long periods of time, the purchasing power of those dollars goes down. So you can kind of think of Bitcoin as the exact opposite of the US dollar, right? It's both digital instead of electronic. It is fully transparent versus opaque. It is completely decentralized versus fully centralized. And a key piece of all of this is the programmatic monetary supply versus what is a more variable human-led monetary policy. And so where we find ourselves today is there's kind of these two ideas, right? There's these two almost financial systems, if you will. The legacy financial system is the one that you're all familiar with. It's based on electronic CUSIPs. We can trade everything from stocks, bonds, currencies, et cetera. We're basically trading ones and zeros in centralized databases. And that system's worked pretty well, right? It's been the best technology that we had available to us for many, many years. But now there's a new piece of technology, a superior piece of technology. And what that allows us to do is to actually go from an electronic type of asset to a fully digital asset, where assets can be decentralized in ownership. They can trade globally 24/7, 365. And they can also be transacted in a peer-to-peer manner. We don't need the centralized authorities anymore. So you can rip those middlemen out. You can drive cost savings, efficiencies, et cetera. And so in this new system, what we are seeing is a ton of adoption, value, and human capital flowing to this kind of new financial system. And what I mean by that is, if you just take kind of from a data point standpoint, Bitcoin has gone from a quote unquote market cap, right? Market cap's not exactly the best metric to use for a currency, but let's use it for a second. It basically was created in 2009 is when it actually launched, to today, 11 years later. It now has over a $200 billion market cap, right? And if you look at kind of on a comparison standpoint, gold is at an $8 trillion, $9 trillion market cap. The money supply globally is somewhere in the $80 to $90 trillion market cap. And so when you start to look at kind of how small Bitcoin is compared to these global assets, you say, look, it's got a lot of room to go if it's actually superior, if it's going to get more adoption, right? If entire generations of people are going to believe Bitcoin as a digital currency, as a store of value, a medium of exchange versus these other things. At the same time, though, you can also look and say, well, in the last 11 years, we've gone from, kind of invention or creation to $200 billion market cap. And so it's pretty impressive to see what's already occurred. The second thing is, if you were to look at something like usage of these, if you take the on-chain adjusted transaction volume of Bitcoin, so this is basically Bitcoin that is being transacted actually on the Bitcoin network, on the settlement layer, but does not include exchange traded volume, does not include kind of going back and forth between the exchange wallets, right? This is actually trying to pinpoint the usage of Bitcoin for transactional purposes. Bitcoin was used more last year than the volume that occurred on Apple Pay, PayPal, or Venmo. So think about that for a second. Everyone knows Apple Pay, everyone knows PayPal, everyone knows Venmo. But those products were used less on an annual transaction volume basis than the Bitcoin network. Now, Bitcoin, again, has a ton of advantages, right? It's available globally, whereas many of those products are not. But what we are seeing is we are seeing an adoption of Bitcoin, and we're seeing that adoption continue to accelerate. We're seeing a growth in the computing power. We're seeing a growth in transactions. We're seeing a growth in adoption, right? There's now estimated to be over 100 million people who currently hold some form of Bitcoin. And these people are very long-term thinking, right? So if you go and you look, over 60% of Bitcoins have not moved in the last year, meaning that even with 60% of Bitcoins being held for the long term by kind of these holders, we still saw in 2019 we saw more transaction volume on the Bitcoin network than we saw on PayPal, Venmo, or Apple Pay. So if you really kind of start to think about this, 60% isn't moving, but there was still more volume. And so it's really incredible to kind of see the statistics behind this thing. And that's where you're seeing this value kind of accrue over the last decade or so. And so I know that there's a couple of questions. I'm going to try to leave as much time as I can for questions. The last thing that I want to just kind of highlight around value for Bitcoin is ultimately what we are seeing is we are seeing a demographic difference, right? And what I mean by that is if you were to go and let's say talk to the gold community, right? The gold community and the Bitcoin community actually agree on 95 to 99% of all the problems. They'll sit and they'll tell you every single issue in terms of wealth inequality, the Federal Reserve, the inflationary nature, the lack of kind of sound money principles. All of that is in agreement. The gold and the Bitcoin community will also agree that the solution to those problems is sound money principles, right? This idea of kind of true money rather than a currency. And so those sound money principles have two applications. You can apply it in an analog version, which is gold, or you can apply it in the digital version, which is Bitcoin. And so where the gold and Bitcoin community differs is taking those sound money principles and applying them, right? What is the actual application of sound money that is going to be best? The gold community believes that it's the analog version, which is gold. The Bitcoin community believes that it is this digital version. Now, in a very overgeneralized manner, what you tend to find is that the analog versus the digital application of sound money is more receptive to certain demographics based on age. So the more digitally native you are, the more you believe in the digital version of sound money principles. The less digitally native you are, the more you believe in the analog version. Now, that's not always true, and there's always exceptions. But when you start to think about this, what we are going to see here is we're seeing a macro environment that's forcing people to go find inflation hedge assets. We're seeing a macro environment that's pushing people to go and find, how do I protect my wealth? And so what we've seen is we've seen gold, Bitcoin, real estate, et cetera, do very, very well over the last couple of months. But one of the key pieces is that Bitcoin has outperformed everything, right? Bitcoin is up, I think it's like 60% year to date. Gold's up about 25% year to date. And stocks are basically flat to, slightly up, kind of single digits up. And so when you start to look at this, what you realize is that the sound money application in the digital format, which is Bitcoin, not only has the protection mechanisms of sound money, but it also has a very asymmetric outlook. And that asymmetric outlook becomes very important for investors because it accomplishes two things. One is I know that I am protecting my wealth from inflation or other sorts of manipulation going on in the legacy fiat system. But also two is if demand continues to increase at the rate that it has been, this Bitcoin will be worth a lot more in US dollar terms than it is today, right, over a long period of time. And so what I personally believe is that every single person in the world at some point is going to, quote unquote, get off zero. And what I mean by that is simply that today, 100 million people own Bitcoin. At some point, there will be 7+ billion people who own Bitcoin. So we have 6.9+ billion people to go, but everyone's going to get off zero. And some of them will put 50%, 100% of their net worth in Bitcoin, and some will put 25 to 100 basis points, right? It's different for everybody based on your goals and what you're trying to accomplish, your risk profile, your liquidity needs, etc. But what I do believe is going to happen is that we are going to see Bitcoin continue to kind of ascend to this global importance. And it's really because when you put a superior piece of technology that is freely available on the internet, anyone can go and access this, and they can convert their fiat to digital currency or to Bitcoin. We have seen time and time again that the superior technology with the network effect, you leveraging all of the benefits of the internet, again, the digital version becomes bigger, stronger, and more valuable than the analog versions. And so what I think we are kind of in the process of watching here is this rise of Bitcoin over the last 11 years. But I think we're kind of just getting warmed up as this goes. So the last thing I will say is, as an investor, a board member, and a pretty heavy user of the BlockFi platform, one of the things that to me is really interesting when I talk about those two financial systems, there's the fiat system with a traditional bank. If you think of kind of all the services you get at a bank, in the digital world, those haven't been available to you. So the fiat banks don't want to work with these digital currencies, or at least they haven't been. They're starting to warm up to the idea. But in the digital world, if you use Bitcoin as your reserve currency, right? So for myself, I denominate my wealth in Bitcoin. I think of everything in Bitcoin. When I go to buy something, I think of how many Bitcoin am I having to spend to buy this thing? And so I want to have something that can service the needs, all the financial services that I need. And that's what BlockFi provides. If I want a loan, I can go ahead and I can put Bitcoin in, I can get a US dollar loan for liquidity needs. If I want to earn interest, I can use the interest-bearing account. If I want to convert more fiat into Bitcoin, I can use that. BlockFi is going to be launching a credit card that'll pay me my rewards points. Rather than rewards points, it'll pay me Bitcoin as kind of my cash back, right? If you think of a sound money back. And so I think that a platform like this, not only one, is it growing really fast and it's a great business, but two, from a user experience standpoint, it just solves the exact needs I have, right? When I made the decision to convert mentally from a fiat-based world, denominating everything in dollars to denominating everything in Bitcoin, what I then needed was something that could serve the financial service needs of that Bitcoin kind of denominated world, and that's what BlockFi provides. So I'll stop there. I don't know how people are going to kind of read me the, oh, there we go.
You got me. I'm your question reader.
All right.
And
that was a lot of talking, man. I don't think I've done a monologue like that in a long time.
It was awesome. I mean, and the way that I know that it's good is because of the amount of questions that we got coming in. I mean, we
all right, let's go rapid fire then.
All right, rapid fire. I'm breaking them into themes. We got a ton of questions on regulation. Right? Are governments going to allow a competing currency, is what somebody asked. Somebody asked about the potential for government seizure. Thoughts on regulation, what the future of that looks like, risks there.
So there's a couple of tiers here. Let me start with kind of the highest level, which is our government's going to allow competition. The short answer is governments have no choice, right? This is something that kind of was born on the internet. It's fully decentralized. If you think of a centralized company, so let's say, Facebook's a great example. They launched Libra. What happened the second that they decided they were going to launch this private currency? Immediately, politicians start yelling and screaming, "You're not allowed to do this. Come in front of Congress. We're going to grill you. We're going to stop you. This is illegal," all that kind of stuff. And the threat that a government has is, I'm going to put you in jail. Right? I have guns, I've got jails, and this is, you don't want to play with me, and so you're going to not do what I don't want you to do. When you have a decentralized thing, there's nobody to go get. There's nobody to call in front of Congress. There's no CEO of Bitcoin. And so what happens is, even if the United States said, you know what, we're going to ban ownership. Anyone in the United States that owns this, right, that kind of one play would be, we're going to ban ownership. I think that there's this global kind of game theory playing out, which is, I fundamentally believe if the U.S. did that, Russia and China, who have actively and openly and publicly discussed trying to get off the US dollar system, would immediately run and start to try to adopt something like Bitcoin, because it would get them off that US dollar system, right? And even maybe some countries in the Middle East and in South America, et cetera. And so it's kind of, the countries that embrace this are going to have the advantage. The countries that try to ban it or get rid of it, what they're actually going to do is they're, one, going to even legitimize it more, and two, then is they're going to push their adversaries on an economic standpoint to actually adopt it, because then those countries will have the advantage of using this kind of superior technology than they do. The second thing that people always ask me is like, well, can't we just shut down all the miners? And so because it's so decentralized, the computers that are actually running the program, we would need countries around the world to work together to shut all of the miners down all at once. This is literally impossible. It's not even nearly impossible. It's impossible to get 186 countries around the world to say, every single miner that's within our borders, we're going to shut all at the same time. Right? It's just not going to happen. And so are there countries that could, again, put regulations or kind of outright bans? Of course they can try, but because it is so adopted, because it is so decentralized and so global, what you're really doing is you're simply just raising your hand and saying, I'm going to opt out as a country of this superior technology, and therefore you're going to drive adoption in other places. And so instead what we've seen is we've seen congressmen, right, Warren Davidson, a bunch of these folks who are actually embracing Bitcoin, right? They're saying, look, this is the future. We cannot stop this. We must embrace this. You're seeing the OCC tell banks, hey, you are allowed to actually custody this stuff under your current charters. And you see places like Fidelity who are saying, look, we're a big, kind of financial services organization. We believe this is a 20-year trend, and we are going to get ahead of it. And so they've literally created a complete digital assets business that works with large institutions, right? Myself with Morgan Creek, we went and we got 2 public pensions to invest in the anchor funds where 15% of the fund is in Bitcoin, right? So you're kind of seeing all the points of adoption. And now you're seeing public companies take their balance sheets. There's a company called MicroStrategy. It's got $1 billion+ valuation, about $500 million on the balance sheet. And the CEO took 85%, $425 million, and he converted it to Bitcoin. And so it's just going to be really, really hard, I think, for the government to kind of to step down onto a digital currency like Bitcoin when you've got banks holding it, you've got your public institutions holding it, you've got public companies holding it, you've got your financial services folks holding it. And so I just don't worry about that, I think, as much as other people do.
Awesome. And let me ask you a next question. Similar in nature, and you did touch on this a little bit when you talked about inflation. But the direct question that we saw pop up a couple of times is Federal Reserve action. So the U.S. government inserting money into the economy. Do you view that as positive for Bitcoin?
Yeah, I mean, look, if you think of it from a marketing standpoint, just the fact that they keep engaging in this kind of very irresponsible quantitative easing, it is just pushing people to look for inflation hedge assets. So Paul Tudor Jones wrote a great piece called The Great Monetary Inflation. And in it, he said, look, they're printing trillions of dollars. I have to move my portfolio. I have to move my capital into inflation hedge assets. He went and he did a really big deep dive on all the inflation hedge assets, precious metals, Bitcoin, real estate, et cetera. And he came out and he said, look, the goal is if you're going to move into inflation hedge assets, you want to be with the fastest horse. Basically, what's going to be the thing that's going to appreciate in value the most? And so he decided that was Bitcoin, and he put 2% of his assets in Bitcoin. And so I think that that's going to be a common thing is people already know, okay, lots of quantitative easing. I need to get into inflation hedge assets. We're already seeing these assets do well. But now what people are starting to realize is that Bitcoin is likely to do the best out of that basket. So it's not a gold's going to do bad and Bitcoin's going to do well. They're all going to do well. It's just which one's going to do the best. My opinion, Paul Tudor Jones, others, they all believe that it's Bitcoin. And I think that's why you're seeing them kind of rush into the asset.
Okay. And I'm going to pivot us a little bit to the use of Bitcoin as cryptocurrency, as payments. I saw a couple questions fly in related to volatility, right? The question basically is, hey, this is volatile. How can this be used as a stable form of payments? Thoughts there?
Yeah, so I think that there's two key pieces to this. The first is you have to look at this from a technology standpoint. And so don't look at a snapshot today of where it is. You have to understand of kind of how is this thing growing over time, right? And what I mean by that is kind of the technology evolving and improving and where are we going? Right. And so if you think of gold, for example, gold served as money for thousands of years. It was really hard to take around the world. So it wasn't very portable. It wasn't very divisible. It was really hard to transact with, all these kind of issues. And so in order to improve the use of gold as a currency, what we then came up with was paper claims on the gold, right? So kind of this gold backed dollar. And that was easier to use. Now I had a physical piece of paper. I didn't have to carry the gold around. It was very clear what I had. It was very divisible. I could transact easier, et cetera. We then created credit on top of that. We then created electronic dollars on top of that. And so if you kind of think of these like layers, gold was layer one, paper claims, and then kind of all the way up. What we're seeing with Bitcoin is one, when you start out with the kind of layer one, it's much more important to have security over everything else, right? In a decentralized world, security is the most important thing. And so the Bitcoin computing network is the most secure computing network in the world, right? It has more computing power on it than anything else. And if you kind of just think about that for a second, the most secure computing network in the world is currently only valued at $200 billion. That's like the equivalent of like AT&T stock. Right? Like just think about that for a second. And so when you have that really, really secure kind of computing network and you're optimizing for that, then what you'll start to see is you'll start to see layer 2, 3, 4. That's where you're going to get a more efficient, lower cost kind of transaction type product. So you're going to be able to send things through like the Lightning Network. It's going to be much cheaper, much more efficient. You're not going to have to take as much price kind of risk and all those things. The second piece to this is as more and more people adopt the currency, it becomes less volatile. So if you actually look at the data, Bitcoin has become less and less volatile kind of as a trend over the last 10 years. And that's just because you're getting it in more people's hands, right? If you think of a public stock, if there's only a 1% float, of course it's super volatile. There's only 1%. And as demand increases, everyone's kind of panicking over it, right? You get these boom and bust cycles. But as you get more and more of the company into or of the equity into people's hands, it becomes less and less volatile. And so that's what's happening with Bitcoin. Again, this is not a overnight thing, right? We're literally talking about 11 years ago, there was a piece of code that was written with the aspiration to be the next global reserve currency. We're only 11 years into this. This is a multi-decade type play. What I think investors have to remember is that at some point in the future, this will serve as the currency you use every day. Right now, what it's serving as is a store of value and something that you can convert your fiat into in order to protect yourself from all of kind of the shenanigans that are going on in the legacy world.
All right. And I love that stat about the computing network. That might even be crazier than the one you mentioned about Apple Pay. The Apple Pay one that blew my mind. As somebody who uses Apple Pay for literally everything, hearing that Bitcoin did more volume, I mean that blows my mind. But I mean the computing network, that might be a little bit crazier.
Yeah. I mean, and if you think like one of the things I wrote about this previously. So every single time that we've had a shift in global reserve currency, basically one country has attacked another, right? So there was kind of the winner of the world or the most powerful military in the world. They got attacked. The new winner of that war then was kind of the global superpower, and they implemented their currency as the global reserve currency. That works in an analog world where violence is what determines who is the most powerful. In a cyber world or a digital world, it's not about who has the strongest offense. It's about who has the strongest defense. And if you can keep people out, you by proxy are the strongest. And so having the strongest computing network actually makes Bitcoin the strongest kind of currency in the world, meaning that all of these countries, whether it's the United States, China, Russia, whatever, they can't hack the Bitcoin network, but they can hack each other. And so Bitcoin having the greatest defense actually means that it has the strongest military and a cyber kind of component. And I believe that Bitcoin is going to rise to the global reserve currency without ever dropping a bomb, shooting a bullet, et cetera. We're going to see kind of this ascension because it's just simply the strongest military in a cyber world.
Awesome. And unfortunately, we are coming to the end. I think that's going to have to be the last question that we can get into. But, you know, Anthony, this is your first boot camp. And for everybody who's returning, they know that we like to do jokes in between at the end of every segment. So let me hit you with your first boot camp joke. The question is, how does NASA plan a party? NASA, the space organization.
I have no clue.
They plan it. Get it? Like a planet.
I get it. That's a pretty good one.
All right. I get heckled in the chat with the jokes, but hey, you know, it keeps me going throughout the day.
Should come up with the immature jokes. That'll keep everyone's attention.
There we go. Awesome. Pomp, thank you so much for joining us. It's awesome to have you here. Amazing presentation. The chat was active. You know, so glad to have you at our first boot camp.
Absolutely. Thanks so much for having me, guys.
All right. Take care. All right, guys. And we've got a special offer going on today. Again, this event is brought to you by BlockFi. They were the ones who made this all possible. In the chat over on Hey Summit, scroll down to the bottom. I am dropping in a link to go ahead and sign up for an account. You know, you can earn 8.6% APY on their high yield interest account. I mean, that's not something you can do with USD in the bank today. And today only, you can get a special $50 Bitcoin bonus when you sign up. That I just dropped that link in the chat. So make sure you take advantage of that. I'm actually going to be doing it in between presentations today.